10 days ago, one man became the richest human being who has ever lived. A trillionaire, the first one in history. And on that very same day, with that very same stock, thousands of ordinary people started losing their money. How is that possible? How can the same company, on the same week, make one man unimaginably rich and quietly drain the wallets of the regular people who believed in him? This is the story of the biggest stock launch in the history of the world. A launch that went up like one of his own rockets, and then came back down to earth so fast that the people who bought in near the top were left holding nothing but losses. And by the end of this video, you will understand the single hidden number that explains the whole thing. A number almost nobody was paying attention to that turned the most anticipated stock on the planet into a trap. Let us start at the beginning. For years, people had been begging to own a piece of Elon Musk's space company. You could not buy it. It was private, locked away from regular investors. And the longer something stays locked away, the more people want it. So when the company finally announced it was going public, that it would sell shares to anyone with a phone and a brokerage app, the demand was unlike anything the market had seen in a generation. On June 12, 2026, it happened. The shares were priced at $135 each. The company raised $75 billion in a single day. Not a record for the year. Not a record for the decade. The largest stock market debut in the entire history of the world. And the moment it started trading, it took off. The price did not just rise, it launched. Within 3 days, the stock had climbed to around $225 a share. That is a gain of nearly 70% before the company had even shown its first report card as a public business. It got so big so fast that for a brief, dizzying moment, this one company was worth more than Amazon. It even brushed past Microsoft. And on paper, the man who controlled it, Elon Musk, became the world's first trillionaire. Thousands of early employees woke up as millionaires. A few became billionaires overnight. The headlines screamed success. Social media was euphoric. Everyone wanted in. And this is exactly where the trap was hiding, because here is the number nobody on the news was shouting about. The number that explains everything you are about to see. When the company went public, it did not actually sell very many shares. Only about 4% of the entire company was available to buy and sell on day one. 4%. Now, why does that matter? Think of it like this. Imagine a stadium with 100,000 seats, but only 4,000 tickets are printed. And then imagine 1 million people all trying to buy one of those 4,000 tickets at the same time. What happens to the price? It explodes. Not because the show is good. Not because anyone has even seen the show yet. But simply because there is almost nothing to go around, and a tidal wave of people are fighting over the scraps. That is what sent the stock to the moon. It was not proof that the company was healthy. It was a tiny supply meeting a giant, desperate demand. And a price that goes up for that reason has a very dangerous quality. The same force that lifts it can flip around and crush it. Before I show you the moment it flipped, do me one quick favor. If you find yourself wanting to know how these traps work so you never fall into one, hit that subscribe button. It is free, it takes 1 second, and it is the only thing that tells me to keep making videos like this. Okay. Now let us watch the rocket come down. The first crack appeared just a few days in. For the first time since it went public, the stock fell. Only a few percent at first. Easy to ignore. The believers said it was just a breather. But underneath, the ground was shifting. A new kind of trading had just opened up, one that finally allowed people to bet against the stock, to profit if it fell. For the first time, the doubters had a way in, and they took it. Then came the real blow. The company quietly announced it wanted to borrow $20 billion. Now stop and think about how strange that sounds. This was supposedly one of the most valuable companies on Earth, sitting on a mountain of cash. So why was it suddenly asking to borrow a colossal pile of money? That question spooked everyone. Investors started to wonder what they had actually bought. And once the fear started, that tiny 4% float that had rocketed the price up now worked in reverse. With so few shares to trade, every wave of selling slammed the price down hard. The stock fell. And then it fell again. And again. In a matter of days, it lost roughly a quarter of its entire value. By Monday, it closed at around $155, sinking right back down toward where it had begun. And here is the human cost of that fall. The average person who bought the stock in the open market, after all the hype, after all the headlines, watched nearly every dollar of their gains vanish. There was one investor who asked to buy 1,000 shares during the launch. He was so excited. And because demand was so insane, he was handed just 17. 17 shares out of the 1,000 he wanted. He watched the stock struggle, decided it could not find its footing, and sold at a loss. That was the experience of the everyday buyer. Not riches. Regret. So that explains how it happened. But it leaves a much bigger question. Was this company ever really worth the price people were paying? Or was the whole thing built on a dream? This is where it gets uncomfortable. Because when the experts actually opened the books, the picture was not pretty. The company had lost nearly $5 billion in the previous year. A huge chunk of that bleeding came from a newer artificial intelligence division Musk had bolted on, a venture that was burning through cash at a staggering rate. And every single one of that AI venture's 11 original founders had already walked out the door before the stock even went public. Musk himself admitted the project was, in his words, not built right the first time. Then there was the promise. The reason people believed the price could go even higher. The company told investors it was chasing a future market worth more than $28 trillion. 28 trillion. A number so enormous it is hard to even picture. One of the most respected valuation experts in the world, a professor known as the Dean of Valuation, looked at that number and called it a hallucination. He said he would be embarrassed to even publish it. When he ran the real math, he concluded the stock was worth far less than people were paying. Another major research firm did its own calculations and landed on a value that was a small fraction of the launch price. And there is one more piece that should make any small investor pause. Musk personally controls more than 80% of the voting power, which means if you buy the stock, you get to come along for the ride, but you get almost no say in where the car is going. Every big decision is his alone. And remember that tiny 4% of shares that was available to trade. The other 96% is locked away for now, but not forever. In the months ahead, those shares are scheduled to be released. And when a flood of new shares pours into the market, all that extra supply can press down on the price even harder. So let us go back to where we started. The same week, the same stock. One man became the first trillionaire in history. And countless ordinary people, the ones who saw the headlines and felt the fear of missing out, ended up underwater. That is the lesson hiding inside this whole story. The most hyped opportunity is very often the most dangerous one. When everyone is racing to get in, when a price is climbing for no reason other than that everyone else is buying, that is not the sound of a rocket taking off. That is the sound of gravity getting ready to do its job. Because in the stock market, just like in space, what goes up without anything solid beneath it always, eventually, comes back down. So the next time the whole world tells you that you simply have to buy something before it is too late, remember the 17 shares. Remember the 4%. And ask yourself the one question almost nobody asked in time. Not how high can this go, but what is it actually worth?